All right, guys, check it out. We have 3 stocks to break down this video, all of which are pretty oversold if you ask me. So we're going to break down the charts, my thoughts, what I'm looking to do, and maybe later in the video we'll break down the indexes, which right now on this beautiful Friday afternoon, it's about 1:40 p.m. on the East Coast, we have all the indexes moving all over the place. So we have a jam-packed video today, guys. If y'all find value, all I ask is for you to hit the like button and, of course, to subscribe. It's free, and you might as well follow me on X as well. That's also free at Stocks Talk Stocks. That's linked down below. And with that being said, guys, cheers. Let's dive right into the video. So again, it's about 1:40 p.m. right now on the East Coast. And the crazy thing is, well, honestly, not so crazy considering how much the stock market's gone up. Now we're seeing a bit of selling, consolidation across the board here. Well, maybe not so much on the Russell. The Russell is selling off. It's down 1.1%, but we have the NASDAQ up a little bit, pretty much consolidating on the day, up 0.2%. The S&P's down 0.2, 0.3, as the Dow's pretty much at break even. And again, it makes sense considering how much the stock market's gone up since the FOMC press conference, which was just 2 days ago. And leading into that, stocks were doing fairly well as well. So before we dive into the indexes, we'll do that later in the video. Let's break down these 3 stocks that I'm looking at right now that are fairly oversold in my opinion, some more than others. And I think there could be potentially, it's not guaranteed, but I think there could be some upside here moving forward. And I'm actually, I guess, indirectly investing in one of these. So let's dive into it. Actually, it's the first one that I'm indirectly investing in. And by that, I mean, I'm actually buying an ETF called XLE, but that's not the one that we're going to talk about in this video. I'm going to talk about Chevron CVX, which is part of XLE. Excuse me again. XLE is an energy ETF, and CVX, which is Chevron, is a stock within that ETF. And I think oil is a little bit, or just energy in general, the stocks are a little bit oversold right now. So I'm actually, again, buying XLE. So instead of me making a bet on one individual energy stock, I'm buying the entire, sector, if you will. That's kind of my bet, at least one of my bets here. I think they're a bit just energy in general oversold, but especially CVX. You guys can see ever since their last earnings report, the stock went from $170 down to $140, so dropped a good $30 or about 17%. And I'm not sure if you guys have noticed, but slowly here over the past couple of days, this has been creeping up. You can see CVX has kind of bottomed, at least in the short term, at about $140. Now we're starting to break back over the 50 and the 180 SMAs here on the 4-hour chart, which we haven't done that since really the end of October, mid-end of October. So we're starting to break out again slowly here on the 4-hour chart, and a full breakout, in my opinion, on CVX could come if we do start taking out this point right here. Let me show you what I'm looking at right now, guys. We can see $150. That was support all throughout May, it seems like, June, early mid-July. Then we obviously ripped all the way to 170. Then we broke under 150, which, what did that do? That made 150 a resistance. So yes, we're breaking out above the moving averages right now on the 4-hour chart, but we're right by 150, which was a support. Now it's resistance, and we're testing it in real time. So I think if CVX could break past that point, which, let me set my alert at 150. Let me do that right now. Mark is that we're above 150. We could have more upside. Maybe we could fill the gap right here towards, 160, 162. So watch out for this window on CVX. I think it's pretty, I'm not going to say it's guaranteed, but that's kind of what I'm thinking in the short term. Again, if we break 150, 152, these are critical spots. So the next one here is Starbucks, guys. SBUX is the ticker, which this one's not looking, I guess you can say, the best in the short term, considering we're under the moving averages on the 4-hour chart. We do have a death cross that's starting to form. You guys can see we did break under 99 and now we're at 96. So that's not the best sign in the short term. But if the bulls are able to recover past, back over $100, if they could retake that $100 mark, we break back over the moving averages here, this could be a play back towards, in my opinion, 110, maybe even higher. So let me set my alert very quickly before I forget here, guys. At $100 per share, mark is that we're above. And you guys can see each time we've broken over that point, it seems like we've had some runway towards, 105, 108. Let me show you guys this quickly. 105-ish, 104. That's a big spot of resistance from, it looks like, June, July, August. And then in just recently, about a month ago, in the middle of November, we got up to about 108 after the earnings that came out, which were pretty good from what I remember, guys. So in my opinion, Starbucks is just a bit oversold, but, we have to wait for the confirmation. Just because it's oversold doesn't mean we just go and blindly buy it, because, again, we're under these moving averages. We're seeing a death cross starting to form here, but big but here, if we do start recovering back over 100, that's where I'm going to be watching it very, very closely again for a move, maybe back towards 104, 108, and we'll see where it goes from there. So that's Starbucks, ticker symbol SBUX. And before we dive into the last one, guys, don't forget to get your free stocks from Moomoo. Quick little plug here. Make sure to use that link down below, or simply go to stocksarefest.com/Moomoo. Listen to this, guys. Once you open up your account and fund it with your initial $100 deposit, you get 5 stocks, each of those being valued up to $2,000. And if you fund your account with at least $1,000 for a limited time, the clock's ticking. On top of those 5 stocks that you just got, you get 10 more stocks, totaling 15 stocks, each up to $2,000, guys. So get on it. Use that Moomoo link down below. And of course, that is an affiliate link. It helps out the channel. Full disclosure, guys. And with that being said, cheers. Let's talk about the last stock here, which did very well during 2020 to 2021, that period of time. And since, guys, well, it's not been doing as well. It's actually been doing very poorly. But maybe now things are starting to turn. The company here is Chewy. They reported pretty solid earnings a couple of days ago, or about a week or two ago. And their stock today, when I'm actually making this video, is up over 5%. And now we're actually testing a major spot of resistance at about $21 per share. And you guys can see on the 4-hour chart here, Chewy has been reversing back over the moving averages for the past, or over the past couple of days. And the resistance we're testing is right around $21.50, $22 per share, which has been a sticking point since the beginning of November. So a good month and a half now, we've struggled to break out of that point. So in other words, if Chewy is able to break above $22, let me set my alert there now. Mark is that we're above $22. We could be seeing a monstrous breakout. Now, am I saying it's going to go right back to the highs from 2021? Guys, that'd be insane. Absolutely not. I'm not saying that. We hit $120 in 2021. Who knows if we ever get back to that point? So forget about $120 in 2021. That's in the past. That's over with. But could we start moving towards, let's say, the high 20s? I mean, look, we have a wide open gap here. I think that's totally possible, right? High 20s, 28, $29. That was support, it looks like, back in April, May, into June a bit. Then we broke under it, obviously then making it resistance. So that could be a spot where we fill the gap. Or maybe in the short term, we go to 25 first, then break that, maybe start going towards 28, 29, 30. These are some targets that I have here in the short term, on Chewy. That's if we're able to break out of this $22 mark. So yeah, guys, these are 3 stocks that I'm looking at. And again, I'm not in Starbucks or Chewy or Chevron for that matter, but I am indirectly investing in, I guess you can say, Chevron, via the XLE ETF, which is, giving me exposure to energy in general. A lot of the time, guys, when I'm looking at, let's say, semiconductor stocks or energy stocks or banks or financials, right? A lot of the time I'm like, why am I going to go and pick, the next bank stock or the energy stock that's going to outperform the bunch? I rather just make a bet on a sector, and that's what I do a lot of the time, not with tech stocks really, but a lot of the time with, energy or semiconductors. Although I did make a ton of money on ExxonMobil, about 3 years ago. I bought it when it was at 30. You guys remember when this stock went all the way down to like, I forget how low it got. I mean, geez, this thing got down to 30, so I don't think I bought it right at 30, but 40, 45 bucks, yeah, I was buying ExxonMobil in the pits of this crash that we saw, and made some nice money on those shares. But for the most part, guys, when it comes to energy, I'm buying ETFs like XLE, and I still own XLE. I recently bought more, actually. And yeah, that's the way I do it. Not for all the stocks out there, obviously, but if I want to make a bet on a sector, and let's say I don't want to do the research and pick the stock that's going to win, or even try and do that, making a bet on the sector via an ETF is a very smart thing to do, at least in my opinion. What do you guys think? Let me know your thoughts in the comments. Hit that like button. Make sure to subscribe here on YouTube, and you might as well follow me on X at Stocks Talk Stocks, and I'll catch you guys in the next video.